One of the main perks that make the HSA such a popular choice among investors is its triple tax advantage features that it offers. Let's look at an example. Let's say you have a family and decide to contribute the maximum amount of $7,750 to your HSA this year. Normally, you would have to pay 3 different types of taxes on this money you earn. This would be federal income tax, state income tax, and FICA taxes, which are Social Security and Medicare taxes. These 3 taxes can easily add up to about 33% of every paycheck you make, meaning that you would normally pay $2,557 in total taxes on this amount, leaving you with just over $5,000 after taxes. However, when you take the $7,750 and place it into an HSA, it essentially becomes invisible to the government and those taxes no longer apply, allowing you to keep that extra $2,500. From there, you can invest the money in your HSA into things like mutual funds, and as your account grows and you withdraw money for medical expenses, you still won't pay any taxes.